Okay, guys, I wanted to get back at you. I'm calling this stock market part two update. So I gave a economic report on what caused us to go down. And obviously we got a nice bounce on Monday, right? Things went up. I wanted to show you some areas that I think and some general directional and even updates on the Nikkei because this Japanese yen US dollar carry trade and all the issues around that are really what triggered this. Yes, we had high unemployment number come in, and the SOM rule, many of you learned about for the first time, got invoked. But even Claudia Somm said, well, hey, hold on a minute. But it's a bigger picture than just that. I don't want you to think that this is completely over. Don't forget the global tension, right? Well, I don't, at this time, I've been so focused on doing this the last 2 or 3 hours. I don't know if anything's happened in Israel. I don't think so. But again, everybody's looking to what Iran response. That can turn and create a downturn in the markets just from a war perspective or an increased war like tit for tat. You bomb and kill our people, we bomb and kill your people. Well, pretty soon it's multiple countries, it's boots on the ground. It could get ugly very, very quickly. People are playing with large things at stake here. So the other thing is just to talk about the Nikkei, and I'm going to pull up some news reports. But just to give you a summary, so it wasn't that long ago that the Japanese Nikkei topped at 42,224 for a close. And then it got as low as 31. So it was a huge sell off. Compared to the US, it was three times, right? So when they closed down on their Monday, it sent a lot of panic. So we opened up Monday massively lower. Even the inner market, there were a few things I was able to buy, but the bounce started really by the time we opened. And you saw that. And right now, I see a continuation. And when I did an update on Misty, in the evening on Monday evening later, I said, listen, it all depends on what the Nikkei does. Well, the Nikkei's come along with a 10 plus 11% bounce. But I want you to understand what that's also telling us and what's at stake. So I'll make this much quicker. So let me read to you some of the things. It says the Japanese Nikkei index suffered its most catastrophic single day decline since the infamous Black Monday of 1987. I remember that well. Uh, I had was really starting to trade. There was a 3 month period that I literally just took a sabbatical from work and was just trading full time. And when that hit, I was like, oh my gosh. To me, that came out of nowhere. And it was all currency issues. And um, so this unprecedented loss has followed a few red days, wiped out all of the index's year-to-date gains, plunging into negative territory after an almost 30% gain in 2023. As of Tuesday, August 6th, the Nikkei is up more than 1% over the year. So this is including this 10, 11% bounce that they had on their Tuesday. Remember, with the dateline, they've already closed the market. We'll be entering our market in 3 hours from now. So the point being that Japan's rate hike had a potential impact on Japan's economic recovery. So anyway, they're playing around with the yen, trying to keep the yen from falling and other things. It's got us in a situation that the whole world, right, just like in the US. So investors need to closely monitor economic indicators from China and other Asian nations, as well as the upcoming monetary policy decisions of the Reserve Bank, for instance, of Australia. All of these banks and all of these interest rate decisions impact globally. And in Asia, they impact the Nikkei greater. But so is said, as the US sneezes, the rest of the world can get a cold. So it's not far that we're the leaders in a lot of way. So I wanted to point that out. I wanted to get something out. And I wanted to talk just quickly about ways to look at this and how it may play out. And this doesn't matter if it's the US tech industry or Japan. So here's the series of move downs, right? This is their peak, and this is where they went down, came down, came down. What we don't really know is this the final resting place. Okay, it's a pretty major pullback. They've had a bounce. That bounce is bringing them to like 29, 30%. So anybody that follows Fibonacci, there's usually 38.2 retraces, there's a 50% retrace. But the point is, this is kind of an A, B, C movement. The question is this an A wave move down and we get an up, a pullback, one more up to something like here? Maybe it's a 60 or 52, 50 or 62% retrace of the entire down move. And that constitutes a B only then to get a C. And your C usually moves at a minimum what your A was. So you get A, B, C, a complete A, then you get an A, B, C up for a B wave, and your C is going to come back here or lower. So the point being, very similar to what we could find ourselves in the US. So don't think we're completely out of the woods on our scenario. I mean, I see a bounce in most of these stocks. I just did an Amazon. You can watch that video. I showed where I see them filling a gap. Okay. But we could turn and revisit, okay, these lows that we recently had and go lower. Don't think because we bounce and we get back up some percentage of this 2-day drop, right? We no matter what, yet Monday was still a drop. It just was nowhere near as bad as what it opened. I know all of you know that. So you had this big pullback on Friday. You had a super big opening on Monday, and we already started to move up. Okay. So don't think, though, that if I had the US index up here, that we don't do an ABC on that. We shall see. You would have to get back up very near top levels here. Um, I could plug in something, let's see. Let's plug in NASDAQ and see what it gives us. We'll just look at the NASDAQ 100. So again, we can get back into some of these levels, but that might be just what they are, some levels. Let's look 1 month. I don't know what all it's showing. Okay. So again, we can bounce and then we can come down lower. Nobody exactly knows. We have to let it play out. But don't feel like this entire thing is over. It has to be watched a lot. Okay, so that's what I got for you, peoples. I didn't want this to be too long. I'm just calling it, turn down in the markets. Are we safe? Whatever I put the title on. All right, guys, I need to get into doing more videos for the Yilmax funds that you guys dearly love and care about. And I'll be putting out something on the declaration, which is probably just about out now or very soon from now. Okay, guys, bye for now.